What's different about next year is that the stock market is trying to digest two 20% back-to-back years. And our base case at the moment is that the S&P 500 will rally strongly to 7,000 by the middle of next year, but the second half could be more challenging, and so we end at 6,600. I'm going to explain why this is only a base case, and I think that we can see some reasons why the second half could actually be much stronger. So I think of this as a forecast from now until June, and then when we get to June, we're going to revisit whether or not the market could do even better. So our basic thesis is you have many tailwinds building next year. The first is the Federal Reserve has a put because inflation is cooling, and now the Federal Reserve wants to support economic growth and employment. The second tailwind is that we have a new president and what we call a Trump put. He is the most stock market focused president ever, and he wants to boost confidence from business leaders and boost stock prices. And what we think that is going to happen is that there's going to be a tremendous amount of cash taken out of bonds and risk-free investments into equities. Now you wonder, if this is true, why do we think the stock market does well in the first half but does poorly in the second half? And that's because we looked at all those instances of when the market was producing two back-to-back years of 20% gains. That's happened 5 times since 1871. And 4 of the 5 times, equities actually declined in the third year, meaning 2025. I don't think that that's going to be the case in 2025. But keep in mind, 5 of the 5 times, the stock market did better in the first half than the second half. So I am optimistic about next year, even though history says there's only a 1 in 5 chance the market is higher in 2025. So this is something we hear from many of our clients. They're saying that 2025 should be very tough or a down year because we had 2 back-to-back years of 20%. Whenever we believe...
I just figured up how much it would have cost to buy in Nvidia stock 10 years ago and become a millionaire. When I did the math, the answer was a startlingly modest 3,625. The magic threshold is now significantly smaller because Nvidia's stock has increased in recent days. I also looked at what indicators would have shown Nvidia's potential for enormous profits in my backward-looking exercise. And for anyone paying careful attention, there were some positive signs regarding the company's future. However, what are the current prospects for Nvidia? In 10 years, where will the business and its stock be? I'm not going to claim to know the solutions, but I'll venture a guess as to where I believe Nvidia will be in 2035. The most significant presumption I have regarding Nvidia's future is that the impact of artificial intelligence, AI, on the globe is still in its early stages. However, I believe that the adoption of AI agents that can carry out activities on their own will reveal more of the iceberg in the not-too-distant future. Is it possible to develop artificial general intelligence, AGI, in the upcoming decade? Most likely based on your definition of AGI. I concur with Jensen Huang, the CEO of Nvidia, that in 5 years or less, AI models will be able to pass any exam that humans can. However, I wouldn't go so far as to say that by 2035 AI systems will be sentient. I firmly believe that Nvidia will continue to play a major role in AI for the ensuing 10 years and beyond. In comparison to what Nvidia will release in 10 years, the company's new Blackwell GPU architecture, which boasts the most potent AI capabilities to date, will probably seem excruciatingly slow and cumbersome. In my vision of Nvidia's future, the business will aggressively enter new markets, such creating custom AI chips. Additionally, I believe that the market for autonomous ride-hailing, or robo-taxis, will grow rapidly over the coming years, with Nvidia standing to gain greatly from this development. Though I think AI is Nvidia's greatest opportunity, I also think the firm will grow significantly if augmented reality, AR, and virtual reality, VR, become more widely used. Strong graphics processors will be needed for AR and VR applications, and Nvidia is the best business in this field. I'll tell you what I don't think will happen before I try to answer your question. Nvidia's share price has increased by around 285 times in the past 10 years. Over the next 10 years, I don't think the stock will yield a return that close to it. But as previously stated, I believe that Nvidia will have significant growth prospects in the fields of AI, robotaxis, and AR/VR over the course of the next 10 years. During this time, is it possible that Nvidia's compound annual growth rate, CAGR, will be at least 15%? I believe it is feasible. With a market valuation of more than $18 trillion by 2035, the stock would be a four-bagger if we assume a 15% CAGR. To be honest, my forecast could be a bit overly optimistic. However, Nvidia's stock would more than quadruple over the next 10 years, giving the business a market valuation of almost $11 trillion, even if it achieves a considerably lower CAGR of 8%. The future of the GPU manufacturer looks quite bright, unless an unexpected danger materializes that deters Nvidia. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
True. That's what we call a consensus view. Markets tend to do the opposite. So because most people think we're down next year, I think the probabilities favor us doing better than what most people expect. But with that as the backdrop, this is our rough roadmap. We see the S&P rising strongly, that's 1,000 points through June. And then some sort of decline takes place, taking us maybe to 5,500 before we rally to 6,600 again. Now, when this happens, you have to be ready to buy that dip. These are the 5 instances I mentioned. There are 5 times where the S&P had back-to-back gains of 20%. 1880, 1928, 1936, 1955, and 1996. Here's what's interesting. If we look at the 3-year gains that were leading to that 20% back-to-back, the average gain is 75%. From 2021 to 2024, the gain was only 26%. This is why I'm optimistic. We have not overshot compared to previous periods when markets produce these strong gains. And in fact, if you look at this table, there's one instance where the market didn't have strong gains through the 3rd year. You see 1996 when you were up only 59% and we're up only 26%. Look what happened in the 3rd year. The market was up 31%. So you can see there's actually some really wide outcomes. Down 39% or up 31%. And this is a very messy chart, but I put all this together. This red line represents those 5 years combined, and you can see up 75%. A strong first half, and then a decline in the second half. This blue line represents us today, up only 27%. That's why I think we're eventually going to catch up to this red line. I just don't know if that catch-up happens this year, 2025. And here are all the years that I mentioned, and the blue line compares us to today. But what do I notice? I shaded in red the second half of every year, and you could see that the stock market did better in the first half than the second half. So that's why, for now, I'm going to say in 2025, I'm more confident about the first half. But I'm not necessarily bearish on the second half. I want to see how we do in the first half. Well, not only...
The main concern for Nvidia as it enters 2025 is whether the industry leader in artificial intelligence, AI, chips, can maintain its rapid growth. The sharp rise in some AI companies has led some investors to believe that an AI bubble is developing, and there is evidence that the new technology is emulating past bubbles. After reporting multiple quarters of triple-digit revenue growth, Nvidia has been the leading force behind the AI boom thus far. Earlier this month, news reports were released to reassure investors that the firm and the larger AI industry still had a long runway of growth ahead of them. Although OpenAI, the company that created ChatGPT, may already be well known, another AI startup is beginning to gain traction. That's Anthropic, the company behind the Claude AI chatbot, which has garnered billions of dollars from the digital behemoths Alphabet and Amazon. The fact that Anthropic is currently negotiating a significant new funding round is encouraging for both Nvidia and the industry as a whole. Several media reports claim that earlier in January, Anthropic was in advanced negotiations to raise $2 billion, which would have increased the company's valuation from $16 billion less than a year ago to $60 billion. The revelation is the most recent indication of privately held AI startups' valuations soaring, a trend that reflects increased investor interest in AI and optimism that businesses like Anthropic can someday generate billions of dollars in earnings and justify their valuation. Since a sizable portion of that $2 billion is probably going to be spent on Nvidia chips to run Anthropic's AI models, Nvidia will ultimately profit from the craze around AI startups. Although Anthropic had previously collaborated with Nvidia and purchased its chips after it acquired $4 billion from Amazon last November, the business stated that it would train future foundation models using Amazon's Trainium and Inferentia chips. Although the specifics of the new fundraising round are unclear because it hasn't completed, Nvidia is expected to benefit in some way from the agreement because it is widely acknowledged as the industry leader in AI chip technology, and Anthropic may become less competitive if it completely commits to Amazon. According to Matt Garman, CEO of Amazon Web Services, the company sees its AI processors as a supplement rather than a substitute for Nvidia's GPUs. Additionally, the investment round fuels the AI arms race among startups and should push competing companies' investors to spend billions more. For instance, in October, OpenAI closed a $6.6 billion investment round, valuing the business at $157 billion. NVIDIA CEO Jensen Huang personally presented the company's first H200 AI supercomputer to OpenAI, a significant client of NVIDIA. Though it will probably take years, the startup run by Sam Altman has plans to create its own AI processors. It will remain dependent on NVIDIA's chips for the foreseeable future, and the company's most recent investment round may result in billions more going to NVIDIA's coffers. Additionally, NVIDIA invested in the round, which might improve its ties with the AI startup. Even though major internet firms like Amazon and others are developing their own AI chips, it will be challenging to unseat NVIDIA, which is thought to hold a 95% market share in data center GPUs. With its Rubin platform, which is a more sophisticated version of the recently announced Blackwell, NVIDIA is continuing to innovate at a quick pace. Another advantage of NVIDIA's flat management structure is that it prevents the siloing that has beset rivals like Intel and speeds up and simplifies decision-making. Lastly, because it is a pure-play semiconductor company, it has an advantage over possible competitors like Amazon, which have other priorities. When NVIDIA introduced its CUDA parallel computing model in 2006, it likely laid the groundwork for its AI foundation. Today, it boasts hundreds of software libraries and AI models, demonstrating its substantial technological edge. Jensen Huang, the CEO, has long been considered a pioneer in the field of artificial intelligence. All things considered, NVIDIA benefits from AI, and the billions of dollars pouring into startups at skyrocketing valuations demonstrate that the AI boom and NVIDIA's AI-driven expansion are far from over. In 2025, investors should anticipate another successful year from NVIDIA. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
First and foremost, let's look at Nvidia. Think of what's happened in the last weeks and days, frankly, to this market. A week or so ago, 10 days ago, 2 weeks, Microsoft announces $80 billion in CapEx spending for 2025 on AI. That energized stocks. Well, this week, how about $500 billion from the Trump administration and Stargate, which includes OpenAI and SoftBank and Oracle. $500 billion in CapEx in AI infrastructure spending. And then this morning, Meta Platforms, $65 billion in AI infrastructure CapEx spending. We're going to talk about Meta in a moment, but that was all these. Where do you think all this spending is going? It's all going. Do you trade the names that are doing the spending, or do you trade who they're paying for the AI chips? And the beneficiary of all this spending is probably going to be Nvidia. And so we looked at a paper money trade in Nvidia, if you believe that. We looked at a paper money trade in Nvidia going out to the February 21st expiration and buying the 148 call, the at the money call in Nvidia, and then going out to next week looking at the expected move of about $6. Now, when we did this, it was trading about 148. It's a little lower now. So we're buying the 148, selling next week's January 31st 155 call, right in line, $6-7 higher. You can adjust that strike if you want to. Remember, the most important part of this is the strategy, the call diagonal, buying further out, selling short-term data, collecting that theta, the calendar spread with the built-in vertical spread, making it the diagonal. So a bullish play on Nvidia, buying February 21st, that's 28 days, 4 full weeks from today, and then selling next week's 155 call. Can you adjust those strikes? Of course you can. When you put the trade in, you may want to adjust those strikes. Right now, I put this in at about $5.10. It's trading about $4.70 right now. It's sold off a little bit post open here, so it's trading about $4.70 now. But the 148, 155 call diagonal. Remember, the risk is on a call diagonal is what you spend. So if you spend $4.70, $4.80 on this, that's the risk on this trade. You can extend duration on this trade because it's basically 3 weeks. The duration on this trade, the difference between the long and the short is 3 weeks. You can extend duration, thus chipping away at that net debit, also chipping away at the break even. Okay, that's our trade in Nvidia, the call diagonal.
The advancements in the artificial intelligence, AI sector, have been one of the major market drivers in recent years. Simply put, many time-consuming processes can be automated and streamlined by AI's sophisticated algorithms, freeing up humans for higher-level work. Because of this, many people think that generative AI will lead to a surge in productivity, generating huge profits for businesses that leverage this innovative technology to its fullest potential. President Donald Trump unveiled investment Stargate earlier this week, claiming it will be the biggest AI infrastructure investment ever. According to the press release, the private joint venture plans to invest $500 billion over the next 4 years in the development of AI infrastructure, with initial funding from SoftBank, OpenAI, Oracle, and AI-focused investment firm MGX. In order to meet the processing power requirements of AI systems, the program intends to construct up to 20 massive data centers throughout the nation. The announcement also disclosed the names of a number of businesses that will be contacted to supply the required technology. Let's examine 3 that could benefit from this significant investment in infrastructure. The fact that Nvidia was chosen as one of Project Stargate's primary early technological partners should come as no surprise. The business invented the graphics processing units, GPUs, which are now standard suppliers of the particular kinds of processing power needed by AI. The gold standard for AI processing, which is primarily done in data centers, is Nvidia GPUs. Because of this, the corporation controls a large portion of the market, with 98% of the market in 2023, which is comparable to its 2022 market share. Although the 2024 numbers are not yet available, industry observers anticipate hearing that Nvidia has maintained its dominant position in the data center GPU market. Some investors have expressed fear that Nvidia's growth may have peaked, but the size of the Stargate project serves to highlight how far the company still has to go. Ben Reitzes, an analyst at Melius Research, believes that Nvidia may end up receiving more than $100 billion of Project Stargate's funding, making the chipmaker the project's largest benefit. Given its continued prospects, Nvidia is reasonably priced, trading at just 33 times its anticipated earnings for the upcoming year. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.